Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 28th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. The previous session here rolled over a bit to the downside, found lows at 42.77, eventually was able to bounce back up back above the previous session's lows and closed at around 43.20s or so. We're right at that zone right about now, 43.21, the last price from yesterday's session. And overall, we're still below the 43.50 level. That's the key level there. We did fill the gap in here, and 43.50 continues to be the big level to watch. We only have another couple of sessions here until the new month of trading. The new month will bring us new pivots. We're also going to have new quarterly pivots as well. These are the quarterly pivots that you currently see at the moment. One of the things you'll notice is that when price closes at the extreme of quarterly pivots or any set of pivots here, this extreme could be rejected for a quick reversal back toward the midpoint of the previous quarters range, and that could also lead to an outside quarter up at some point as well. So if we were able to push down and reject, say at 4,200, that could lead us right back up the range over the next several months. So again, watching these quarterly pivots as we head into next week's trading. Right now, inside day, downward bias, watch the previous session's high. Any push through that high could open up surprise rally here, especially with pre-market data points coming out here shortly. GDP and initial jobless claims both to be posted prior to the RTH Open, and then 30 minutes after the RTH Open we have pending home sales. Later on at the close we have Fed Chair Powell speaking as well. That could provide additional juice into the end of the day and also heading into Friday's session. So watch the previous session's high. If we get a push through that level, it could open up some strength back above 43.50. Any failed new highs, so if price pushes through the high and starts to show rejection, you're working your way back down within the range. So again, very bearish trade here, so you got to keep an eye on the previous session's high for signs of failure. Watching RTY right here. RTY basically break even on the day, inside day, narrow range, 49% of average. The ES at 43% of average range right now. We were watching the 14.6 level yesterday as a test level here. That's basically the previous month's close price, and it's that edge. It got 14 points below the low and then bounced. Ended up closing back above the prior session's close as well. You can see right here, inside day, holding at support. So 14.6 continues to be a big time level there of interest. Any failure there and you're opening up a potential break and transition that takes you back down. 13.8 would be the rising year-to-date VWAP. 13.650 here, a rising 200-day. That could be targets down below to go find. Overall, again, downtrending market over the last couple of weeks. Keep an eye on the previous session's high. A rejection of the previous session's high and a downtrending 8 period could drop things back down the way. Now, this reaction here is very similar. The development of this pattern, very similar to the pattern we had last time we were here last month. Squat bars both in those places, and then we saw this type of move develop here for a short-term rally. Again, pre-market data here could help provide some additional volatility and movement early in the day. Keep an eye on that previous session's high early on for a failure or a breakout. Now, keeping an eye here on crude oil. This one is down about 0.5% after reaching the target in the previous session. We are now seeing an extreme reversal develop. We're seeing a thrust reversal signal develop, and we have reached not only 94 in the previous session but also 95. So right here from the lows of 88 to the 95 highs here, a big time move of 7 points. That is right in line and actually more than what we were forecasting with the range. On a 5-day narrow range basis, the thing that we were looking for here was for a move of 5 to 6 points. That would take us here. 5 points would be here, 6 points is here. This has ended up being very close to 7 points right now, and it's only really been 2 to 3 days. If you're marking that narrow range, we were looking for a failed new low. We got it. very nice rejection. The very next day was a transition day, and now you've marked the high here at 95. So 95 is the high. We're back below 94s. We have a higher high potential failure that's developing here. And when you have a higher high failure, that usually leads to a reversal back to the prior pivot low there. So that recent low of 88 could be retested yet again. Big time low, big high here. We could be back to 88s up ahead. Higher high failure could be in play, and that target could be easily in play. Now, if we're at the 84 edge and we're seeing rejection, then 84 can lead to back to 89. 89 is the midpoint, and then 84 would be 10 points down, and that takes us all the way back across this distribution. So we had a transition here. We worked our way most of the way, pulled back, fueled up, got the last bit. Now we may have to come back and trade back through 84 and trade between 84 and 88s up ahead. So keep an eye on this right here. Nice little fade after trend day. The previous session's high and close could become resistance here. 94, the midpoint at the moment. Any pullback still today could be sold for a continuation to the previous session's midpoint. If we close back below 92s, that's going to be a heavy rejection here to close back below that prior pivot high. Again, a quick return back to 88 and perhaps as low as 84 could be ahead if today's fade after trend day remains intact. All right, looking at gold futures, you'll notice here gold, big time weakness. It finally got not only the 1910 level we've been looking for, but dropped below 1900. The previous session, a huge high range day. If we look at the one-day reading here, there it is. One of the bigger days that we've seen in a long while here. This was a day of 31.4 points, and the last time you have to find something that big is probably back here, and that in part was due to a large rollover gap up. It eventually filled it back down, and then prior to that you're looking back in these days back here in the weakness. So big time day, huge drop, now below the previous quarter's lows. It got the big time break from that coiled up compression range here. That range had been developing for some time, 1 month, 2 months, 3 months, 4 months, and then some. 4.5 months of development of this range. Maybe you even go back here, but that right there suggests huge breakout potential, and that's what we got. We got the move away from 1950, and we've already dropped 60 points into the 1890s. Now, if this thing continues to show weakness here, we likely fail into about 1800. So the next, we're talking about that 100-point distribution, 1900 to 2000. That's where it's done most of its action here lately. If we're going to fail at 1900, 1800 would be the next one down, and we drop back into this range here. So keep an eye on 1900. Failure to get back above that zone opens up more weakness. Heading into next month, we do have a lower value relationship, so any bounce next month could be sold for new lows up ahead. Keep an eye on that zone very closely. Taking a look lastly at the YM. The YM here got a big time push through the 33.8. So here's 33.8. Here's 34.8. And initially, we mentioned before that these two had converged. So from having one 1,000 point distribution and another, this one ended up converging the two right here, and at 34.8 took it offered right back down. So we got our 1,000 point distributions back. To hold this level now at 33.8 could open up a return back to 34.8 as we trade in here. A failure at this level, and you're dropping another 1,000 points down into the next distribution below, 32,800. So again, we're going to keep an eye on this zone right here. We have reached value metrics, year-to-date value, VPOC for the last 5 years, and also the 200-day moving average. How is price going to respond at these value levels right now? Does it take them offered? Do we find a trap or chop around that area for a while? We will see how it develops here, but a pretty significant sell-off here over the last couple of weeks. Got to keep an eye on the previous session's highs here, any rejection there, and you're rotating back down within the range. If prices can get back above 33,800, you know, with a pretty solid day here, again, there could be a decent little bounce to begin October, but that bounce could be met with additional selling pressure as we try to extend this thing to the downside. So keep an eye on 33.8 here as the market continues to await GDP and initial jobless claims. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.